Hey, yo, this is your Procurator FX, and you pick it another bang, cause pick it another bang. Yeah, so for today we'll be looking at the different chart patterns that you can probably use when trading the forex market. Of it, I'm talking about high probability setups that I've seen play out. Even when you can backtest like from like way back, you could see there. So right here, I'm just gonna remove everything. That's cool. Now let's start on the weekly time frame. Let's get down into how you get to best spot out these patterns. Right. So for one, like the market is always in some sort of a channel. So there's always a channel involved. So let's see what I got there. Of which is also a pattern. It could be getting like some sort of um descending triangle, or you could just say descending channel. Boom. See. Already you see that we've catered for most touches, and then can also cater for most touches over there. See this pattern over here. This is a huge falling structure. Okay, let's just use this one. Yeah, proper. As you see, weekly time frame is just now. Imagine you see we also edited touch rule over there. Now it's proper cloud. We see that we have a proper descending structure. This is also one of the patterns that you can trade in the forex market, as it helps you understand the overall direction of the market. As well as you can see overall the market is trending to the downside. So looking at the high probabilities, obviously it would be us looking for selling opportunities. So now from this structure, we're gonna dive deeper and find other structures on a lower time frame to understand if we're bullish or bearish. Over here, you see that we had this pattern, of which is also some sort of a descending structure. Okay, I'm just gonna clone it. Boom. You see some sort of descending structure, and finally broke a bar. Obviously, this is a bar right about this area. You could have also used this as a source of confidence for you to enter the trade. You see, we have a support over there. We broke below, we resisted, and started selling. So this was some sort of a strong level. It would be best for you to obviously look for buys after the breakout of the structure. And obviously, remembering the structure that we have in a bigger time frame, it would be something like this. So now, looking at it from like a ranging market, obviously a ranging market will be a market that moves like this. Like just illustrate formation. So now looking at it like that, we're going to obviously target this previous high, say this one, because you see that the market literally came to push here and found this resisting price over here and sold all the way to the downside. So obviously we would be expecting that we get a second touch over there. Now as you can see, the market didn't really touch that because what we had an descending resisting structure over here, which is the diagonal. You see 1 2 3, gave a touch again over there. So it will be good to target this here. So this is the power of finding huge structures within the market, as it allows you to easily find the structures inside the overall structure that you will be trading inside, keeping in mind that the structure is bearish. So now we have this, boom, you see. So now from this you see that also we're still in a bearish channel over here, of which it might be possible that we play around up until maybe get a touch here, break up our V-test and probably shoot back to a high, or it's possible that we might push and get a dead touch over here and continue selling as we're still in a bearish market, and we had a dead touch rule over here. This is a dead touch. did see the bigger picture in a higher time frame. This is a third touch order, but then the touch are very powerful. Or we could also use this one like this to find the proper channel. Great. 1, 2, 3, 4. Already had some sort of footage inside this trend. So now going to our daily time frame. So on our daily time frame, now we see that we have this beautiful structure that's falling to the downside. Also, right about here, see if you had taken this as as some sort of descending channel. This was gonna be the pattern, right? This was gonna be the pattern. So now this is beautiful, guys. Look at this one. Also get like a beautiful double bottom of which is also a chart pattern. It's a confirmation for buying opportunities and take care. Obviously, this right here is gonna be a first target. Why? Because the market has a strong level right about there. Probably just gonna target this area from this zone. Why am I saying that? Because it's likely to reverse in this area when the market is in a bearish market. But if we was in an uptrend and we got this structure right over there, this very same structure right over here, then it was going to be a push up, as it was going to act as a continuation pattern, right? Now we found this in a descending structure of which might just boom back to the previous and continue selling back to the previous low, or we could be looking to find support all about this area right here. So from there we know that, you see. So now let's remove that one. Obviously now we're just going to focus on the pattern that's currently happening. You can see we have an ascending channel, which is also a beautiful high probability setup that's likely to play out, you know, in most cases. Yeah, just gonna adjust that a bit. Boom, beautiful. Let me just, yeah, it's okay. So now looking at this is a beautiful reversal structure. Imagine from the structure on the 4-hour time frame. We're coming from a weekly time frame. Now we have a pattern inside a pattern inside a pattern inside a pattern, of which it makes things much easier for us to recognize as to what are we doing actually. And over here you could see that there was some sort of a zone. See, beautiful rejections out of it there, and also came to reject. Now I want to show you something. Look at how the market approached that area. It approached the area with the similar structure that we have in the forward time frame. It's probably only 15-minute that then you'll see proper like this. Boom. I'll put this on over. Boom. It came into corrected structure, broke out. If this was some sort of a risk reduced entry. Beautiful. This was going to be your first target as the market was still in a bearish setup, right? Why am I saying that? Is because you can see that this area, it rejected over there, it broke above, it corrected with the similar structure, just that this was a continuation in an uptrend, but this one was a reversal at a zone. That's the difference. If it's in the trend, obviously you see we broke above, we came to retest. Over here it came to also retest with the bigger structure, of which it's this one. It came to reject this area with the structure, and when we got to this area we also gave out a reversal pattern, of which it was a good sign to take entries. Obviously take profit is going to be here. Obviously if it does break below, let me just it does break below, we know that take profit 2 is over there. And if it does also break below this area, then you get our last take profit over there, which it will be completing the 90% rule of this overall pattern. Now let's jump to a 12-hour time frame. See that everything is still proper. This could have been another entry right over there, of which, as you can see, this is a very strong level. Look at the bar that was circulated over there. So this, using the supply and demand, this is a a demand flipped into a supply. As you can see, this was a strong demand over here, but the market broke the demand and came back to retest, of which now we also have another pattern, of which is around the top. Hey, now I'm showing you patterns. I wasn't planning to show you, but it's cool. So now looking at this, it will be something like this. Boom. The next target will be right about there. We know we have this level, but if we can remove this one now, look at it in the proper, you see that this level is right about here. It's also a strong zone, this one. And this is where our arrow is taking us, using the rounded top formation rules. It says our take profit is here. You see, that's another chart pattern that you can use. But it's cool. And then when you go to your 45 minutes probably, and then you get to also see that we had an impulsive move. Now we corrected over this area, of which is a good sign that the market is still controlled by the bears, you know. So now this could have been a pattern again, some sort of a continuation pattern. Could say it's a flag. It's okay. It's okay. Stop loss probably right about there, because we'll be looking, even when you squeeze this on the chair, you see that it's likely not to get to this point, not unless it reverses again to this point, takes us out, then we'll adjust, then we get more peeps now, right? So it's always in our advantage. But for here, I believe it's gonna sell off from here. Let's go to 15 minutes. We'll see the proper rejections, indicator for most touches. Indicator for most touches. Look at that. Boom, it's proper. See that we had a rejection over there, rejection over here, rejection over here, and now we finally broke, and we also got another pattern, guys. Imagine like the patterns we found. Imagine the patterns we found. Imagine the patterns we found. Imagine the patterns we found. Now it's proper for taking cells. It's proper for taking cells. And that's our take profit. Of which now we're looking at a second entry. First entry is likely here. Second entry, then you hold, so take profit. If you miss your first entry, you look for a second entry still okay. Or if you're inside your first entry, you could also enter here to scale in and maximize your profits. So now this is what we have on old cake. Let's go back to a higher time frame. See there. Trading zone to zone. This is likely something like this. So as I was saying, our next target could be here. Imagine the profits with the proper risk reward. Obviously look at 90% of this. Ha ha ha. Proper. Then you have yourself a proper setting. Obviously if you have a bigger account, to avoid being stopped out due to certain events, you could have just stopped just above this area. There proper, of which now it becomes a 1:2, some sort of a risk reward issue. But what's nice is that once it breaks below, now it confirms your direction, then you can drag your stop loss and let the market run into your direction. and that'll be all for today. Alright.